Hi there, I'm Anamila Akbar. Welcome to the leading program, DCFX UX Talk. This event was accompanied by WPB, and after yesterday's release of US inflation data, how is the current market condition? Today I'm joined by Mr. Sebastian for the Sharp Focus. And how are you, Mr. Sebastian?
Good, thank you.
Thank you for joining us today. So today we can discuss about US inflation data. And so what happened?
So last night, the most important economic indicator now, probably, the US CPI inflation, was released about 7:30 in our night time here.
Yeah.
So in the morning in America.
That's right.
And so yesterday, the US market has a chance to react to the data. And then today here in Asia and Indonesia, our market is reacting to this important data.
Okay, so what is the result of the data?
The result is good, I think.
Okay.
A couple of days ago we said the inflation should be lower.
Lower.
And the inflation was lower. So if you remember before, we were talking about that there's two ways to look at the inflation.
Oh, okay.
The first one is looking at month to month. And used to be that was the normal way to look at it. So what is the change from February to March?
Okay.
But in the last couple of years, because the inflation is very high, so it's become more common to look at the year to year.
Yeah.
So with the release of the data yesterday, the inflation, the CPI index increased by 0.1% from February to March. So that's month to month. And the increase is 5% compared with March last year.
Why did it happen?
It's lower. So in the previous month, February, the inflation was 6%.
Okay.
So it's down to 5%. And that's because, well, like we discussed before, the inflation, the high inflation is started from the raw material, the commodity price. Like the building materials, the food, the energy, oil, gas, coal. And so those prices, the energy and the food, has been coming down. And if you look at the inflation, the food and energy is minus now. So that's helping to reduce the inflation in total. So for example, last month, the energy is minus 0.4%.
4%.
So that's helping to keep the total inflation lower. So coming from the lower commodity price.
And then what do you expect, Mr. Sebastian?
Me or the market? You mean the market expectation?
Yes, you're right.
The market expected about 0.2%.
0.2%.
So they were expecting the inflation from a year ago would be 5.5%, and the actual number is 5%. So it's 0.5% better compared with the expectation. So it's a positive surprise. For me, for Sharp Focus, we actually hoped it would be below 5%. So it's not quite as good as we hoped, but that's okay. It's still a good result.
Okay, how predict market reaction?
So the market reaction was really interesting. So at the beginning, when the number came out, the bond yield, the interest rate went down, the dollar went down, the other currency like the pound went up, and the stock also, the price of the stock went up. So the stock market went up. But during the day, the interest rate went back up again a little bit, and the stock came down a little bit. So it's not a big reaction in the end. But the dollar was quite weak. So for example, the pound strengthened quite a lot yesterday. So the biggest reaction to the inflation is in the currency.
Okay, so that means mixed reaction?
A bit mixed, yeah, a little bit mixed. But still, it's still good, I think.
So what do you think will happen next?
So the next few months is going to be very interesting. So we've seen inflation come down from 9% last year. Now it's become 5%. So it's almost down by half.
Okay.
But in the next few months, we should see the inflation lower again, even lower. And there's two reasons for that. One is that last year is the highest, around June, July. So when you're comparing this year with last year, it should be lower this year because higher last year.
Yeah.
And then if you look at the monthly inflation, so now we're going back to the monthly.
Okay.
So March is 0.1%. The average for the last few months is about 0.25%. So if you take 1 year,
Yeah.
so 0.25 times 12 months, that's about 3%. So it should be that from now 5%, the inflation over the next few months will come down towards 3%.
Will be coming
That's
down.
our expectation.
Okay.
Yeah. So down by more.
Okay, so this is the last question. What will the mean for market, Mr. Sebastian?
That should be positive, I think, because if the inflation comes down towards 3%, the Fed interest rate is now at 5%,
Yes,
almost 5%. So meaning that the interest rate from the central bank should be able to come down, at least stay the same. And so that should be positive, I think, for the liquidity. So for everything, for the bond, for the currency, for gold, for stock, it should be better liquidity and more positive. And then, of course, remember, like we mentioned before, the company is reacting to the inflation by increasing their price.
The price, yeah.
So right now, the company maybe increase the price 10% or even more, and the inflation now, the cost is less. So the result, the profit from the company should be quite strong, I think. Maybe we will see some earnings positive surprise in the next few months.
Okay, this is the meaning for markets.
Yeah, that's a good positive outlook for the markets, I think.
Okay, so thank you, Mr. Sebastian, for joining us today. And thank you for sharing your insight. Thank you for you all watching us. Okay, and I want to just remind for disclaimer, derivative trading and other leveraged financial instrument contain risks. Please pay attention to managing risk. Don't forget to follow our social media and trust me, with DCFX, everyone can trade, okay? I'm Anamil Akbar and this is Mr. Sebastian. Maybe we can see you in the next episode. See you and bye-bye.
Bye.